Hello, folks. Welcome to another week of the Tech Behind FinTech. My name's Nnamdi Osuagwu. I'm the host of the Tech Behind FinTech, where we discuss the news in the fintech industry. We like to cover technology-related topics and so forth. Um, every week we discuss this. We sometimes have guests on, bringing their own expertise. Today is a show. Today is a solo show, so I'll be hosting it, and we're going to go over some news topic. Once again, you're tuning into I just went off screen, pardon that technical glitch. Okay, let's get busy. Let's just jump right into the topic. Also, we are streaming live on Facebook, YouTube, LinkedIn, and Twitch. If you want to leave a comment, feel free to drop a comment in any of those platforms. If you are watching us from Instagram, you can comment, but people are not going to see your comment or questions or things like that. So if you want the general audience to see it, you can go to our website, or you can go to our website will have the links to our Facebook, LinkedIn, YouTube, and Twitch links. The website is Tech Behind FinTech. If you're on Instagram, that our website should be pinned so you can see it there. Okay, let's get things kicked off. Today's going to be a kind of short episode. Once again, we're into dialogue conversation. If you have any questions, post it in the comments in those platforms, and we'll bring your question to the forefront so others can see it. You can also lend your own expertise in comments, and we will post it. I think I'm feeding into my green screen today. Let me come up a little bit. Okay, that's a little bit better. It's weird. I hate when that happens, but we'll adjust it moving forward. Okay, let's jump into some topics. All right, so the first topic we want to cover, obviously we see what's happening with the market conditions. Interesting article on CNBC. The mood is very grim once hot fintech sector faces IPO delays and consolidation. Um, yeah, so bosses of major fintech players sounded the alarm about deteriorating macroeconomic conditions at the Money 2020 Europe trade show. John Collison, co-founder of online payments firm Stripe, said he was unsure if the company could still justify its 95 billion valuation given the current economic climate. Zopa, a digital bank based in Britain, suggested it was less likely to meet its target of going public by the end of 2022. Some interesting stuff in this article. So several executives and investors said rising inflation and interest rate hikes were making it harder for fintech firms to raise money. Within the investment community, the mood is very grim. Ayana Dimitrova, CEO of payment software firm OpenPay, told the CNBC, OpenPay is in the process of raising funds, but it's unclear when the company will be able to finalize the round. Another co-founder, Prajit Nanu, co-founder and CEO of San Francisco-based payments company Neum, said he's expecting massive consolidation in the fintech space. Companies which are not going to raise are going to either get consolidated or shut down. So interesting stuff. So the investment in the fintech sector boomed last year, reaching a record of 132 billion globally, thanks in large parts to the effect of the COVID lockdowns on people's shopping habit. But as worries around rising inflation and higher interest rate hit home, funding dropped 18% in the first quarter from the previous 3 months to 28.8 billion, according to data from CB Insights. So a couple of cool quotes, and we'll get into some commentary. There's going to be more of a focus on unit economics versus just crazy growth. Ricardo Schaefer, a partner at Target Global, an early investor in financial services app Revolut, told CNBC. Stripe's collision had a simple piece of advice for fintech founders at the conference: tear up the 2021 investor pitch. They definitely can't do that. Do the 2021 pitch. It needs to be a new pitch in 2022. Another comment: fintech seeking fresh funds now will need to present a clear path to profitability. Interesting stuff. Obviously, we see what's going on with the market, inflation. We see what's going on with, the stock market, crypto markets. Things are down. Look, I think it just boils down to the basics, right? Like, okay, is your business profitable, right? The whole, buy it and they will come, or we'll wait until we see certain profits. Maybe that's done right now. I think, it seems like investors would want to see, okay, how is this thing going to make money? And what it reminds me of is if you were around during the dot-com boom in the industry, right? You saw, like, in the late 90s, just various companies getting funding for the craziest of ideas, like I'm a pet.com. It was one of those situations where if you had an idea, people are just going to give you some money. Then, market collapse, and then you started to have more foundational ideas. Okay, how is this thing going to make money actually? Is this thing a viable business? At the end of the day, I mean, you hear stories like this. It's not, to me, it's not grim, man. It's just you had a run in which things was rapid growth. Now it's just going back to the foundational economic principles of building viable businesses. They will always win at the end. I don't care how the market is looking. If it's viable and it meets the demand of their consumers, clients, or whatever, you're they're gonna win. I mean, it might not be okay. It's gonna be a situation where, okay, your valuation is gonna be as high as it was in 2020, or so forth. No, but it, at the end of the day, you're gonna win, right? So it just really it boils down, like, what makes sense right now, and you have to be in tune to the market. So if your business is highly dependent on low interest rates, then obviously that's not gonna work as interest rates go higher. So yeah, it's my input. Love to hear yours. Drop a comment. Tell me what you think. And so when you drop comments, if we moved on to other interesting topics, we'll definitely circle back and post your comment and revisit it. But we're gonna get through um, some other interesting topics that we found. Okay. On that note, hold up. Let's go to this next article. Buy now, pay later firms were already in trouble. Apple just gave them one more thing to worry about. So Apple is just announced plans to launch its own pay later loans on Monday, on Monday just passed, expanding an array of financial services product which already includes mobile payments and credit cards, called Apple Pay Later. The service will now allow users to pay for things over 4 equal installments, paid monthly without interest. That puts BNP, buy now, pay later players like PayPal, Affirm, and Klarna in an awkward spot. The fear is that Apple, a $2 trillion company and the world's second largest smartphone manufacturer, can draw clients away from such services. Shares of Affirm have sunk 17% so far this week on the news. The BNPL market had already been showing signs of trouble. Last month, Klarna laid off 10% of its global workforce, blaming the war in Ukraine and fears of a recession. McManus said the sector is pushing people into debt they can't afford to pay back and should therefore be regulated. Um, it's not, yeah, it's not a lot of regulation in that. We discussed that in previous episodes. In UK is seeking to push through BNPL regulation, while the US regulators have opened a probe into the sector. This question came back: do I pay my gas bill, or do I pay off the armchair I bought 3 years ago on interest-free credit that is coming due? Yeah, that's yeah. I mean, that announcement is crazy, because I think when the last we started this yeah, it started this podcast back in 2024, and some of the articles covered in discussions is just seeing how traditional technology and software companies are becoming fintechs, right? You look at Facebook just as, okay, it's Facebook, it's a technology company. Nah, Facebook's a fintech. Facebook owns WhatsApp. They have different payment platforms and different in different things in WhatsApp. I mean, we talked about this before. Google Pay. So when you have these companies that are just massive in scale, and they start offering, they definitely start shooting into the fintech market and create, a huge competition, especially for the existing players, because either you're walking around these days, either you have your team Apple, you have an iPhone, or you have an Android. So now, I mean, that's it. Most people you walk into have one of those two phones, um, and now you have Apple announcing its Apple a BNPL solution. So if you have that, why would you use a Klarna? So it's definitely competition. It's interesting. I guess the CEO of Klarna didn't think so. He said the launch of Apple Pay was an amazing thing for consumers and defended his company's business model. It's very, very interesting. But okay, you have any comments on that? Let me know. We're gonna move on to the next article, but I found that very interesting. Okay, Ethereum. So it's obviously been news for years, and while with Ethereum shifting from their consensus model, which is now proof of work to proof of stake. So they just did a dress rehearsal, and it supposedly went smooth from what the report says. Um, so how, just to let you know, right, it's different consensus methodologies or models. Bitcoin, Ethereum, they use something called proof of work, where it's based on large complex algorithms where miners add another block. That's how that's how a new block is added to the chain. There's another consensus mechanism called proof of stake, which is based on those same well, I don't know if they call them miners, but basically staking their own coin, their own crypto, and that's how they get to um, work in the consensus model. It's lower energy consumption, and it's faster. So Ethereum has been working to make this upgrade. They did a dress rehearsal, but in the technology side, when you're releasing a dress rehearsal, is basically you going through how you would release in production, similar to what a dress rehearsal is, right? It's practice, but you're doing it so that when you actually go live, you can kind of see potential issues prior to going live. So just want to report on that. That should be very interesting. And we see what would happen with the Ethereum. A lot of projects depend on Ethereum and leverage that technology. So it moving from proof of work to proof of stake should be very interesting situation. This last report, very interesting. I'll move on right now. See if there's anything. Yeah, some people are joining Instagram actually. Hey, what's up, Shad? Thanks for joining in. Listen, I appreciate everybody viewing. Always a pleasure. Always awesome. I really appreciate you guys. Okay, let's move on. This report: global Bitcoin adoption to hit 10% by 2030. It's a Blockware report. These reports are so funny. Look, I'm going to talk about the report, and then I'm going to give my own comments. So in this report, they're saying the adoption of Bitcoin could occur more rapidly than the adoption of past disruptive technologies such as automobiles and electric power, with the global take up likely to 10% by 2030. They're also saying that all disruptive technologies follow a similar exponential S-curve pattern. Newer network-based technologies continue to be adopted much faster than the market expects. Let's see. And what else did they also say about Blockware? So it said that based on a metric called the cumulative sum of net entities growth and Bitcoin's predicted compound annual growth of 60%, we forecast that the global Bitcoin adoption will break past 10% in the year 2030. The thing with, look, here's the deal, right? The thing with these reports, not saying that it can't happen. Look, I think digital currency in general is the future, and I'm not anti crypto. I'm not anti Bitcoin, anti Ethereum or anything like that. But with reports like this, it's always important to understand who is the creator of the report, right? And what is their stake. I mean, even in the this financial medical field, and you have these medical reports, but the person who sponsored the report is a is a pharmaceutical company or a medical service provider, right? But and I'm talking about this because I've been on the other side in the on we launched a project called the Fibroids Project, and we're just so surprised how many of these reports you see, and then when you start drilling down who sponsored it, and that's their incentive to kind of add their own biased opinion to it. So so in this case, and the article says, however, the authors of the Blockware report stressed that the model used to predict the rate adoption was only conceptual at this stage, adding it is neither meant to be used as an investment advice nor short-term trading tool, and it could continue to be redefined. I think Blockware Intelligence is a research arm of Blockware Solutions, a Bitcoin mining and blockchain infrastructure company. So might expect it to be a bit bullish on adoption. That's what I'm saying. I wanted to talk about it just because of that aspect. I mean, sometimes with these reports, I find interesting, like who actually sponsored it, who's actually behind the scenes on these types of reports. I just always find that interesting. Hey, Shad, how you doing? Yeah, man. Nah, thanks for tuning in. Definitely appreciate it. Yeah, you know what? Today's one of those weeks. Going to be a short show. Just saw some articles that I found interesting in the fintech. And once again, we are live every Friday at 12 p.m. EST. When we have certain guests on, probably start marketing a little bit earlier, so you guys are aware of some upcoming shows. You could tune in and add your comments. Hopefully, leave with something. That's really the goal, right? Maybe one of the articles we touched on you were not familiar with, and now you are, or you may have some comments about it in general. Goal is to add value, talk about it, try to stay current. So that's why our topics are fresh from the week that we are talking about it. And I definitely appreciate you tuning in as always. So on that note, we like to give it a few seconds. Sometimes people have questions. It's like a few second delay, and then we end prematurely. So I'm going to give it a few seconds before we end to see if anybody post any questions and so forth, and then we're gonna end the show for the weekend, and we'll be back on next Friday, 12 p.m. Eastern Standard Time. All right, so it does not look like anyone's posting, which is cool. So on that note, we will end the show. Thank you very much for your time today. As always, thanks for tuning in. Definitely appreciate everybody. Hold on to Instagram. I'll go. We do a post show on Instagram. I'm gonna do that afterwards. And to everyone, have a great day. And you know what? No, it's not have a great day. Make it a great day. Learn that concept in a yoga class this week. It's pretty awesome. Instead of just having a great day, you make it a great day. Be intentional with it. I'll make it a great weekend. Shelly, thanks for. Okay, we have a comment from LinkedIn. Let's post it up. Shelly, thank you very much. Have a great weekend. I'm going to make it a great weekend, and I hope you make your weekend great as well. Thank you. Okay, on that note, we are tuning off. Take care, guys. Cheers.